Check. Is this thing working? All right, AMD. Let's get it straight down to it on the NASDAQ Stock Exchange. Advanced Micro Devices. And I got an alert today. And some of these alerts are just alerts that I set with my classical trading framework on monthly candles. Let's go check it out right now. And this is usually my setup on my 10-year monthly candle setup. I have my 10-week moving average. Sometimes 30, but right now I'm just leaving it at 10. I have my RSI for divergence, and that's pretty much how I set it up. So back in the days, a formation like this, I draw my resistance lines on the closes and openings of candles. So right now, I probably have an alert for bullish breakout at 15. And the breakdown I have right here at the 10:30 level. And I think today the alert probably got triggered and it pulled back up. And this is the measured move that I have for my... Oh, that's not what I wanted to draw. See, there's a couple of patterns here. There's a descending triangle. And I always like to choose the closest breakdown pattern to the breakdown line and the shortest pattern to increase my chances of reaching my probable target. And then I do my traditional target considerations before this is a measured move. But then I would look if there'd be a wall. That's previous resistance turn support or support turn resistance. And here we have some right here. And if my target brings me under a round number, I would probably cheat, reducing my reward, let's say to 7 instead of 695 to 705, just right above. And here I know I might run into some congestion, so I might raise it just a little bit, just to be above that potential turbulence, that wall. So that's how I do it traditionally. And pretty simple, just wait for the monthly close and then jump in, set my sell stops, or my sell stop to short sell, my buy stops on top of the candle for my profit loss, or for my loss, to stop my loss, and then I put my profit limit at the target, and I just lock and load and forget about it. But that's not what I'm doing now. Right now I'm doing Secretwars. And revisiting Stan Weinstein, looking for candidates. And right here, okay, this is all the lines I drew for the monthly. I'm just going to remove that, remove all trend lines. And you saw that we were close to breaking down on the monthly chart. And we're also close to breaking down on the weekly. Here is the breakdown line at around $10. So I could put an alert on the weekly for a close below 10. And you see that cloud? Well, the action has been going sideways for a while. And now we're right under the Ichimoku cloud, the green cloud, the support. See how it bounced back here? It wasn't ready. You could have thought this was a breakdown. Right at this level right here, you could have thought this was a breakdown. Here you have that candle that closes below this top pattern right here. Let's go back. Let's remove all the noise. All the candles. Let's create some black space. All right, here we go. So what would have happened here? Oh, I have a candle. It closed below the support trend line. The pattern, 30-week moving average trying to go down. I have 12 twice the volume of the previous 4 weeks. I'm going from over the halfway point. This is like stand triple setup, triple confirmation. You have it there. But now I've acquired the Ichimoku clouds from Isa Trader there on stageanalysis.net, and I'm getting quite fond of it. This is a nice stage 3, but what you want is a stage 3 that lasts a little longer, that consolidates, that evaporates all the support. So all the people that were willing to buy, they're out of the picture. And so when the price action actually breaks down from that top pattern, you have less and less, you have less chances of bouncing back up and getting whipsawed, etc. And from now, I've noticed that if you're patient, there's a lot of A+ setups with the triple confirmation, and there's a little fewer A++ setups where you have quadruple confirmation, and that's being below the Ichimoku cloud, that green support, or being above the red cloud for that resistance. And we'll get back here. It was a great stage 2 AMD, the way it blew up. All right, so what happened? There you go. You're in. Price action goes down, and it just bounces off that Ichimoku cloud support, and which is represented by this candle actions right here that you see in the future. 26 periods further, bounces back up, and the price action, you would have actually got triggered out if you would have been an investor. Sell stop you would put in here above the pattern. And traders 4 to 6% above the breakdown line, maybe above the 30-week moving average to protect yourself. And as a trader, you would have probably been triggered out right here, whipsawed. So you don't want to get into that. You want, when the stock goes down and pulls back, you want it to go down and down and down. You don't want that to have a deep penetration back into the top formation, because it kind of invalidates that top pattern, and now the chart has just morphed into a bigger pattern, and now you're stuck in it, and you're just hoping that the higher prevailing trend will bring the stock action down. It's like you're in no man's land at this stage. It's a coin flip. Hopefully the trend's there and it could save you, and that's what Stan says. If you're in harmony with the higher prevailing trend, then you have more chances of saving your butt if your timing's a little bit off. And right here at this stage, what candle was that? That was the candle for the 23rd of October. And let's go see on the monthly if at that stage you would have had that trend in your favor. Is this one? This is the candle for October, yeah. This would have been maybe the top formation that broke down. Indeed, you had the breakdown. And on the monthly, it was starting to look good for you. The moving average trying to go down. And you had these patterns. This pattern was broken down of, close below. This one also. And you had the final one right here where that would be the ultimate resistance before actually breaking down. So I wasn't really looking too bad. You could have, you were in harmony with that 30-week moving average on the monthly. But again, that cloud just saved you whipsaws right here. Where are we today? Right, let's remove that one and that one and this one here. All right. And in the meanwhile, you've been going to stage 3, 30-week moving average starting to go back downwards. And is that where we are today? Yeah. So now we're approaching a retest of that breakdown line. We're below the cloud, so now there's no more support, or at least that support has diminished in value, has evaporated. You still have that $10 line giving you some support. So what we want now is a weekly close below the $10 line. You want 3-week moving average, the RSI to go from positive territory over the midway point at 50 and into negative territory, and that's what's happening here. And you want volume on that breakdown candle. Probably it could be this week or next week. You want high volume on that red candle. Stan says fears that third indicator, but I've noticed the red candles are extensive on breakdowns as well as those green candles of volume on the breakouts. So that looks pretty good, man. It's even a nice top formation. I don't know where AMD is going, but the pressure seems to obviously be on the downside. And the price action, if it reverts and goes back up, well, it has to go through that resistance now that's starting to be developed, that's been projected from 26 candles previously. This level here being shown in the future, it's right here. So definite stage 3 AMD. You could make a case that stage 4 started back here, but failed. But now definite stage 3 working its way to a stage 4. Look, I'm going to put an alert at $13 in case of a reversal of trends. So if ever I forget about the stock, let's say the $10 never gets triggered, then no problem. Who knows? Stage 3s could become stage 2s again. Very possible. Just right now, that's the least possible scenario. So we're going to focus just on looking if we're going to break down here. It looks like a great stage 4 candidate for AMD. I like it. And I can't pass up a chance of practicing my stand framework right here at that nice stage 4. And right here, you see, going to that resistance. If you had that, you're above the 30-week moving average, above that trend line, you had that breakout candle, not super duper volume. Did you have the RSI in your favor? Well, the RSI was already, it was halfway going upwards, but the volume not as much as you wanted to, and just looking at the cloud, it would have been a big no-no. Worst case, you say, look, if it goes up, I'm just going to get in right here, or be part of a bigger base and put the chances on your side. Guys, there's no rush to do anything. You shouldn't have, I don't know how people can manage more than 10, 8 to 10 to 12 trades, especially the stand wave. My traditional framework, I could manage more, even if I don't want to, because of my risk management protocols, my money management protocols. But as stand, you have to every week, man, you have to look at it. You have to draw your trend lines. You have to move your sell stop. So that's part of the framework, right? You have to be on top of things. And the more you have to look at, and then you're looking at new charts to add, can't make those human errors, right? Framework's as good as how you would apply that framework. So make sure you don't get overburdened and you don't have too much exposure. So right now, price action went through the stage 3 or stage 1, rather, it kept jotting out. Market starting ironing out, getting rid of all that potential. Those sellers, they're out of there anymore. They took their profits. The buyers starting to load up, and now we're out of the cloud. You had a few here. Here you could have said, maybe here you had a breakout candle. You had that twice the volume of the previous 4 weeks. You were going above the midway point into positive territory, and you're above the Ichimoku cloud, the red cloud. So that's pretty nice here. You had that pullback on light volume right here, the way you like it. And then you had another chance to get in at this crazy candle right here of that breakout. And that's in line with a bigger formation. Put that even. There you go. Right there. And that's all she wrote, man, for that nice bottom formation of that stage 2. That's stage 1, pardon. And then it just went off. You had pullbacks. You could move your sell stop along the way. Whoa. Let's do it the good old-fashioned way. Wow. Went up, pull back, price goes back up. You could have moved your sell stop right here. Price action went down. When it went back up here, you could have moved your sell stop. Traders, investors. And then it's time to think when you have multiple candles. Time to think about that super duper trend line. 1, 2, 3. And yeah, I'm back on the arithmetic scale. Log was nice. I'm still going to experiment on the side. But I didn't see that much plus value other than being able to draw my trend lines easier. And after a few tests, right now I'm going to stick with arithmetic, but I'm definitely going to keep playing around with logarithmic. But for the framework, I'm going to stick to what I've been doing since the beginning and what I've been doing for my traditional framework. And yeah, that's my thoughts on that for right now. All right, here we go. Traders, half your position here. Investors, same thing. Here we had a retrace and price goes back up. You would have had your sell stop here. And investors and traders would have moved the remainder of the position right here. Remember, investors become traders and when they position their sell stops when you approach the end of a stage 2, or for me, a trend line violation is not the end of the stage 2 per se, but it's going to invoke probably a sideways pattern, consolidation, a slowdown of the current trend, or maybe even a reversal. I don't want to be there. I want to be there when there's no reversal, where the trend is powerful, where it respects the trend line. And let's just see what happens from there on. And you see sideways action, bam, it happens often, a lot of times. You want these pullbacks, 2-3 candles go up, 2-3 candles go up. This is a 2-3 months, you're in there. Even if there's a breakout later on, and this is a classic continuation breakout. Price action goes back close towards the moving average, and then bam, bounces out with a very good volume. Our side goes up, no resistance on top. That's a nice continuation move right there. And pull back, price goes back up. Traders, investors, pull back, price action goes back up. Traders, investors. Is there another? No, there's not 3 points yet. 1, 2. You have to wait for that third point. And pull back. Pull back. Price action goes back up. There's a case right here. On this pullback, price action goes back up. The traders would have moved their sell stop right here on this one, and you would have got triggered out right here. This candle when it reached more like this here, and investors, you would have just kept moving your sell stop along the way. Pull back. So that's where you're set pretty much for now. Traders, you're out. Investors, you're still in the game. And Maybe not a trend line violation because we don't have the 3 points. When you get close towards the end, you could have decided here as a investor to move to take your profits here at the same time as a trader. You want that wiggle room to be able to go up in case there's a pullback. But when you start getting close to the end with this sideways move and you have a violation of a trend line, well, it's not a valid trend line unless 1, 2, 3, but it would be on the 4th one. On a 4th violation, you would be out, and there you go. Okay, 1, 2, 3, and then here you would have taken half of your profits, and even you would have continued taking out your profits here as a sell stop of the trader. Since your trend line violation, you're close to the end, you take your profits there, and you're out. And that's why, again, it's very important to do your lines correctly. You have to be focused. If you miss a step, then you don't take your profits at a good time, then anything could happen, and just all that time you spent it to the framework just to be triggered out at a lower sell stop than you should have because you didn't see the trend line violation. So where we are today, there we go. We're in the noise. Lo and behold, that became a stage 3 right there. Trend line violations are very powerful. And yeah, so that's how the stage 2 would have been played. Would have been nice profits right there on AMD. And now it's time to look at this scenario here where we're going to go into stage 4, guys. All right, that's about it for AMD. See ya soon. Ciao.